Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So that's really how the wave 3 appears. Okay? And Andrew, your question or comment in there is, why is 3 not 1? It appears you can draw these arbitrarily. That's the thing, you cannot. They're perfect Fibonacci ratios. Now the question is how do you determine which wave is which wave other than fib count? When Tom Joseph, who created the Advanced Get software back in the 80s, did this, he back-tested the counts, and he determined that we use a 300-bar count. So if we're looking at a daily chart, we go back 300 bars, and we start looking for these Fibonacci ratios. If we see that 160 to 260% increase, that's typically your wave 3. If we see a wave 1 with a 62% retracement, that's your wave 2. So it's not arbitrary by any means. It's actually pure fib relationships and ratios. Your wave 4 is usually a 38 to 62% correction of wave 3. I've also got that highlighted in red because it's not a tradable pattern. What we've learned and what we've seen over the course of Elliott wave and the course of the 50, 60 years that we tested this, Elliott wave 4s are not dependable waves to trade. When the market starts that large rally in wave 3, that's a trending market. It's better for you as a trader to stay with the trend. Wave 4 is what we call a profit-taking pullback or a profit-taking retracement. If you don't have profits to take, then you don't take profits. You stay out of the market until that wave 4 completes. We would buy back into the trend as long as this is an up pattern. It can be a down pattern as well. As long as the market holds the wave 4, and we've got some rules for that. We'll show you where you would give up on the wave 4 and where you can take an accurate trade. Once that market ends the wave 4, we've got our final push to the wave 5 high, and that is the end of your trend. At the end of your 5th wave, the market is due for either a major correction or a complete change in trend. Now, we saw a major turn in the euro earlier this year. That was set up by a wave 5, and if I can show you the chart a little bit later, I'll do so. But these patterns exist on any time frame. Now, if you're an options trader, I would assume that you'll probably be trading daily charts, 480-minute charts, something where you're going to have a spread between where you're buying the market and you have enough volatility and you have enough time to get a good options price. So my seminar today is going to concentrate mostly on 480-minute charts, daily charts, and when you're doing this on your own, higher from that. So that is the 5-wave pattern. Now, inside Advanced Get, we have 5 different trading strategies. Now, before I get to those, Andrew had mentioned earlier about the inside of the counts. You'll see a little wave 1, a little wave 2, a little wave 3. Those are minor Elliott wave counts, and those are essentially waves within waves. If you want to know when your wave 3 is complete, you can look inside the big wave 3, and you'll notice that a lot of them have perfect 5-wave patterns, just in a smaller scale. So those are the minor Elliott wave counts inside of your major counts from 2 to 3. Now, from a trading perspective, we generally do not trade those minor counts. Our focus is going to be on those large numbers that are circled, the large wave 1, wave 2, 3, 4, and 5. Now, inside of the Advanced Get software, we have 5 different trading strategies, and I'll get to those here in just a minute. Now, due to the short nature of our presentation, I can't get into the details of all 5 of them. So over the course of the years, working with options, working with other options traders, we've really got it narrowed down to 2 out of 5 of our trades are very, very good for options traders. They are the Elliott Type 1 trade and the Elliott Type 2 trade. The Elliott Type 1 trade deals with buying into or selling into a market at the end of your Elliott Wave 4 for that final push to new highs in a Wave 5. On the other hand, once Wave 5 is complete, we have what's called a Type 2 trade, selling the market off or buying the market at the end of a 5-wave pattern, when that major correction or that change in trend is due. So if you looked at it from a call or a put perspective, at the end of a Wave 4, you'd be looking at buying calls in an up market. If the market was in a Wave 5 high, you'd be looking at puts. Very, very simple, calls and puts. Now, as you get more and more complex, of course, with more and more hedging strategies and, other types of hedging, you can do much more with options, but I wanted to just keep it simple for this presentation.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.